Welcome back to the D-Phase. In today's lesson we're going to talk about the institutional order flow entry drill. A lot of times you're gonna hear from me that I call this part EOFED instead of IOFED because it's easier for me to say it like that. So that's pretty much. As we can see right now we're on US30. We got some external microstructure, some high, microstructure shift, lower low, lower high, lower low, lower high, lower low, again microstructure shift, and so on. If we take in the previous lesson, we talked about institutional order flow, normal, and we said that the price went back, fulfilled the premium zone. After that, it continues to go bearish. We got here again this premium zone. Price formed a new lower high in the premium zone, touched this previous low and continues to go bearish. So this is all institutional order flow. Difference between institutional order flow and institutional order flow entry drill is that in the EOFED you'll see the price mostly wants to go so badly down, and it happens in most of times only in the distribution phase, or D phase. On the left side we'll see, according to ICT, EOFED is the part on the market where the price enters the imbalance, leaves the body or wicks below 50% or just touched it, and continues to go bearish. So according to ICT this is EOFED, but for me it can be any zone on the left side. If we take a further look, that the price just touched it and rejects from that low in the bearish scene. So this is EOFED. After that we get here again some pullback in the price. Price just touched the imbalance, continues to go bearish. We got here again EOFED, and so on. This here, let's say it's some internal market structure, isn't EOFED because the price went back in the premium zone, wants to go bearish again. Internal market structure, institutional order flow, not EOFED because enters the premium zone, fulfills this imbalance on the left side. So this is casual institutional order flow. So let's say we got here some internal market structure shift, price forms a new high. So for me, this is EOFED because the price didn't reach the discount zone, just wants to go so badly. It fulfilled this imbalance, but still didn't reach the discount zone. Again, we got here some institutional order flow. If we take this as in dealing range, so again I entered the discount zone. I would say this is even it is the OTE, optimal trade entry. So this is all institutional order flow. So right now we got here some EOFED. Price didn't reach the discount zone, wants so badly to go up. So on the left side we'll see some FVG, but the price fulfilled it fully. If we take a further look, we'll see this inversion fair value gap on the left side. The price lived, so the price just went into the inversion fair value gap, touched it, and continues to go bullish. After that, let's say this is a new internal dealing range. The price didn't reach this premium zone and continues to go bullish, and after that breaks this high here. It happens specifically when it's time for the distribution. I'm gonna show you some sketch now. So let's say I'm gonna draw you some sketch here. We got here some internal market structure shift. After that the price just continues to go bearish through EOFed, forms a low, collects some sell-side liquidity. In the most of times you'll see that the price comes back, fulfills this part on the left side here. Why? Because the market sees this part here as a big imbalance. So this only happens when it's time for distribution. We can't predict this part here because it doesn't have to fulfill that part. It can just come into some zone, leave it half fulfilled, and continues to go bearish. So this is pretty much all of it for this lesson. I hope you understood the difference between institutional order flow and EOFed, and that I made it clear for you. So yeah, have a nice time and see you soon.